What's up, investors? In this video, I'm going to be going through a quick breakdown of NIO stock. Recently, NIO has been on a crazy tear. Just in the past couple months, it's gone up 60%, which is pretty insane for any stock. But especially NIO, considering it fell a considerable amount from all-time highs. We're looking at around 46% drop from all-time highs to around May. And then from those lows, we're looking at a gain of around 50%, which is it's some pretty crazy volatility, but you're gonna expect that with this type of stock, EV stocks, growth stocks, that type of stuff. So yeah, I'm just gonna be going through a quick breakdown of NIO. I'll show you how I do my research, just a really quick overview, essentially. So we're gonna head over to the Yahoo Finance page, and just search up NIO. Look up the ticker, and here we are. So $50. I remember it was just 30 something recently. Yeah, so you could just get a quick glimpse of kind of the stock, how it's been performing. So the next thing I do is just head over to statistics. Just take a quick look at kind of the basic ratios and everything, the valuation measures. See that it's not too crazy overvalued or anything. We like to see a nice institutional ownership. That means the people with the smart money, as they call it, they're putting their money towards NIO as well. So also we're just gonna take a quick look at the balance sheet, make sure there's no like debt issues or anything. So the current ratio, they're sitting at over 3, which is really good. That indicates that they can cover their current liabilities with their current assets 3 times over. So they're in really good financial health. And now we'll just take a look at kind of the financials. So you can see that they're consistently growing their revenues. That's what you want to see in a high growth stock, and that's really important for NIO. It's one of the biggest points for them. So now you just want to head over here. You can kind of see a graph of how NIO has performed in the quarters and annually. You can see they're consistently growing their revenues, even quarter over quarter. And it's significant growth too. It's not just a couple percentage points. All right, so yeah, that pretty much sums it up with Yahoo Finance. And now we're gonna take a look at tip ranks. So I really like tip ranks just because it kind of gives you a gauge of where analysts kind of see things. And you can see NIO is a pretty popular stock on this website. So we're looking at about 26% upside within the next 12 months according to analysts. It's getting 8 buy ratings, and it's looking pretty good for NIO so far. The lowest price target we're looking at is around $50. $50 is what it's at currently, but it does definitely have a lot of room to grow, especially with their growing revenue, and they are expected to become profitable within the next couple of years as well. So we should be looking forward to that. NIO for me is definitely a long-term hold. If you buy in at any point, honestly, you gotta expect a lot of volatility. But currently, NIO is still a buy in my opinion, as long as you're holding for a long time. Yeah, so we're on macro trends right now, and I'm just gonna go ahead and take a look at their revenues. You can kind of get a grasp of how their revenue's been growing. You can see it's pretty consistent growth, and you can kind of just get a gauge for some of the price ratios, the valuation measures, that type of stuff on this website. You can kind of see how they've compared over the years, over the months, and this is really useful, especially for like stocks that have been on the market for a long time. You can see how they've performed throughout the years. Next thing we're gonna head to is Simply Wall Street. Now, with this website, it's a little tricky. You do have to sign up for like a premium plan to view unlimited companies on their website. But with the free trial, you do get a couple months of their services for free. And then also with the free plan alone, you can look at about 5 companies per month, and then you gotta wait till the next month before you can look at some more. But at least they still give a free option. So yeah, I kind of just go through this real quick. Gonna take a look. You can see the returns have been pretty stellar. Now we're gonna look at the valuation. So of course NIO is significantly overvalued at the current prices, according to traditional metrics at least. So we're looking at a fair value of around $18 from Simply Wall Street. Now, usually Simply Wall Street has somewhat reasonable fair values, although sometimes they are a little far-fetched as well. But we'll take that with a little grain of salt. But if we were looking at the actual fair value without any of the growth or anything factored in, we'd be looking at around a price target of around $18. Now, keep in mind, NIO last year was a penny stock. So when we look at the 5-year chart, you can see NIO was only sitting at around $3 to $4 back in 2020, early 2020. So they've definitely gone pretty ballistic since then. But in my opinion, that is justified, and we should continue to see growth throughout the years. So again, NIO is quite overvalued. 16.8 price to book compared to average 4.5. But again, that's taking in companies like Ford into account, which aren't expected to have as high growth as NIO. And yeah, you could take a look at their forecasts. So this is their future growth forecast. So you can take a look. You can see that they are expected to do major revenue out in 2023 compared to the current, let's see here, around 22 billion in the Chinese currency. And then in 2023, they're expected to pretty much quadruple that, which is pretty impressive. Now, will that directly correlate with the stock price? We'll have to see. But I do have high hopes for NIO in the future for sure. Now, in terms of analyst future growth forecasts, the company is definitely above the industry and the market. So you can see that's all in the green here. So we're looking at solid future growth forecasts. And that's reflected in the Simply Wall Street graphic here as well. You can see that they're heavily focused in the future, and their health is pretty substantial as well. So yeah, in terms of EPS, they're not projected to be profitable until around 2023, a little after 2023. But that is one of the caveats that you're gonna have to deal with when purchasing NIO. They won't be profitable at least for another couple of years, as they're just pretty much focusing on growth. And but eventually they should get there. They have a very large addressable market. The Chinese EV market is exploding. It's supposed to grow exponentially in the coming years as well. And yeah, you can just see that NIO, while it is overvalued, it does have a very promising future. In terms of debt to equity, that's looking a little better now. So their debt was relatively high for them before, but seems like they've kept it at a somewhat constant pace, and the equity has grown as well. So while the debt to equity ratio is still high, it's not as bad as it was previously, and it looks like that will improve over time as well. And in terms of their balance sheet, again, we looked at their current ratio before, which was sitting at a little above 3, which means that they're in good cash position. They do have a little bit of a concerning amount of debt. However, that should not be a problem for them. They obviously don't pay a dividend. Shouldn't expect that anytime soon. So we can just take a quick look at the management here. Bin Lee, he's like the Chinese Elon Musk, some people would say. So you can see they have a decent amount of experience. Of course, NIO is a relatively new company, so they're not going to be on there for too long. But generally speaking, NIO's management team is considered experienced with a 2.9-year average tenure. And that's about it. So yeah, again, with the ownership, we're looking at institutions owning around 28%. I think it was around 30 something percent. So the numbers can vary a little bit from site to site, but it's generally in that territory. The general public owns most of the shares, which means like you and I, retail investors. Individuals own quite a substantial amount, 10.7%. That's pretty fairly substantial for a company of this size, especially. Oh, it looks like the CEO owns quite a few of that 10%. Yeah, so the CEO owns a lot of that 10%. He owns about 10.1% of the company with around 165 million shares. Interesting. But you can see there's a lot of other companies that invest in NIO as well. Yeah, public companies like Tencent and institutions, big institutions and well-known, well-respected institutions like BlackRock, Vanguard. And yeah, they're putting their money into NIO. Seems like they think it's a good idea. JP Morgan, it's not huge, but some of these other companies do own quite a bit. And that's about it. NIO looks pretty promising in the future. At current levels, it's quite overvalued, but you are paying a premium for that growth. And yeah, that's about it. Feel free to like, subscribe, comment if you found this video helpful, and I'll see you guys in the next one.